So welcome now to the next video. This is the continuation of the adjusting entries from the earlier video. So we'll be resuming in number 36. Yan. So let's answer. So on December 1, your company paid its insurance agent of 2.4 for the annual insurance premium covering 12 months. So, yun. So this problem involves a prepaid adjusting entry, which I have done here, where we paid the insurance agent of 2.4, so cash is going out of 2.4 and an asset of prepaid is going in the business of 2.4. And on December 31, we recognize the decrease of prepaid insurance. So we cancel out of 200 and we recognize an expense of 200. And so what date should the adjusting entry be done? It's December 31 and every calendar year or every fiscal year. Number 37, how many accounts are involved in the adjusting entry? Here we can see it has it involves two accounts, and here 2 accounts. 2. And number 38, what is the name of the account that will be debited? We debit supplies expense and we credit prepaid supplies. Yan, insurance expense, prepaid insurance expense, and prepaid insurance. Number 40, what is the amount of the debit and credit? And so how did we derive to 800 here? Yeah. And how did we derive in 200 here? Given that the prepaid insurance is 2.4 and it is a 12-month insurance. So by dividing this into 12, 2.4 divided by 12, the answer is 200. So why 12? Because we recognize the expense from December 1 to December 31. So it is 1 month of 12 months. So if we multiply this 2.4 times 1 divided by 12, we get 200. And let's proceed. Now in numbers 40, what be okay, 800. And what would be the effect of the financial statements if the company fails to make the adjusting entry? So if we fail to recognize the expense, we are overstating the net income. And 42, let's continue. Also, the difference here, it also involves a prepaid. And however, here, okay, so what would be the adjusting entry? The adjusting entry would be on December 31 again. What would be the adjusting entry? It would be 2. What would be the account debited? It is prepaid insurance. And what should be credited? It is expense. And what is the debit and credit? It is 2. So what's the difference here from 36 to 41? Here, we recognize the expense first. Then we proceed in recognizing the asset after. Let's proceed to number 47. 48. On December 1, insurance company received 2.4 from the company from the annual insurance premium. So this involves an unearned adjusting entry. What date should the adjusting be done? It would be done in December 31. How many accounts are involved in the adjusting entry? It is 2 again. think it's most of the time it's 2. Number 51, what is the name of the account that will be credited? It is unearned revenue. And debited unearned revenue, credited of service revenue. And here. So here we do not recognize the revenue first. It is a liability. Then as soon as we perform the service, then we would recognize the revenue. And so number 52. Oh, this is from the flow of time we recognize the revenue. So what is the amount of debit and credit? We divide 24 to 12. 24 divided by 12 and we get 200. Number 53, what would be the effect of the financial statements if the company fails to do the adjusting entry? Then we fail to recognize the revenue, then we understate the net income. 54, the last two problems. In December 1, your company began operations and you purchased supplies on credit. Okay, go on account. So what would adjusting entry? Then the adjusting entry would be this of 800. And why? Because we purchased 1.5 here on December 3 of 1,500. However, on the end, we can see that the left supplies is 700. So we can assume that 800 was deducted in the supplies in order to reach that 700 of amount. So yeah, so we minus the supplies of 800. And last number 60 to 65. Here we do the opposite. Instead of minusing 1.5 to 700, here we recognize the 700 of prepaid supplies. So this is the balance sheet method. And this is the income statement method. So if you have any questions and suggestions, please comment down below and I will try to answer them as soon as possible. And so God bless everyone and stay tuned.